guys. You can see time is around 8 o'clock. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. And today was Nifty 50 expiry as well. And we'll look at it later on. First, let's look into Bank Nifty trade analysis, guys. You can see the market clearly gapped down. It was a huge gap down, guys. You can expect the market to gap down around 400 points, guys. If 400 points, 440 points in gap down, which is actually a huge gap down, guys. And you can see since today is expiry, you can expect some kind of manipulation. But in case if this would have appeared in normal days, guys, such kind of huge gap down, the market would have continued further selling towards the downside like this. In order to target all those sellers, guys, because a lot of sellers might have entered expecting that the market might continue further towards the downside. A lot of sellers might have sold here, expecting the market might continue to target all those sellers and market rallied all the way towards the upside. But let's look into price action and see how the market behaved. You can see after the market gapped down around 430 points, you can see the market rallied upwards and even broke the high of the first candle. And if you try to mark the 5-minute zone as well as the mid of the first candle and the anchor day VWAP level, you can see the day VWAP level, the price is trading about all those. And you can see rejection of price here. And you can see here, this is the weekly VWAP level, which is also an important confluence for one to trade. And this weekly VWAP level, you can see rejection of price from these levels, and the market clearly broke this high as well. You can see rejection of price from weekly VWAP level as well as towards the downside, and the market impulsively broke towards the upside. You can see this considered this to be a break of structure. And if you try to plot this swing over here, guys, the low to the high of this candle, and if you try to plot the 450 level, you can see clearly this is the 450 level, guys. And after this 250 level, if you try to plot the Fib extension levels, the common point within this to the common point within this to the common point within this, we could have targeted the first target to be here, the 100% now here. And we could have targeted the 1.68 level as well. You can see clearly the market came all the way to 1.68 level. And after this, you can see the price rejecting. And we could have targeted all the way to that zone, guys, the 1.68 level. You can see you could have easily entered long position here, seeing this kind of rejection of price from lower levels, the 250 levels, and targeting all the way to 100% more or the 1.68 level. You can see how the market came all the way to 1.68 level. You can see this kind of retracement, guys, where market was not able to break this low here and rejection of price from that levels. But here you can see clearly the market broke this structure. You can consider this to be a chalk formation. And you could have waited for retracement in case if the market would have rejected price from these levels, guys. And if you consider this swing momentum, the common point between this to the common point between this, you can see here, in case if the price would have rejected from this level, guys, this is the 450 level. In case the price would have rejected this level, you could have easily taken short position since the market here formed a chart. But here there is no clear bearish momentum, guys. You can see because the market didn't reach a proper supply zone or there wasn't any aggressive selling, guys. Here you can see the market is trying to move sideways. But here, after this kind of huge downward momentum where the market formed chart, the market was not able to cross this 200 moving average. You can see the price trying to break this 200 moving average but failed to close below this 200 moving average in a 1 minute time frame, which clearly signifies some sort of bullishness, guys. But in case if you could have expected that the market might face rejection from these levels and continue further towards the downside, you could have waited for a retracement. But you can see this solid bullish candles here trying to break the high. You could have easily entered once if this 450 level would have been broken. But what happened is that the market formed chalk towards the opposite side as well. You can see clearly the first entry would have been here, guys, after the market breaking the 450 levels and keeping your stop loss just below that level. But in case if you could have waited for retracement and if you could have plotted these levels, the common point between this to the common point between this, you can see again the market here retraced to a 450 level over here. This is the 450, right, where the market retraced. And in case if you try to plot the Fib extension levels, the common point between this to the common point between this to the common point between this, you could have almost targeted the 100% levels. You can see clearly. We could have targeted the 100% here. You can see the market came all the way to this zone. It's almost near, guys, but easily you could have entered long position here. First entry was this momentum candle, guys. This was the first entry where you could have easily entered, keeping your stop loss just below that candle itself. Or you could have entered after seeing this kind of 200 moving average support where the market tried to break but took support from this 200 moving average. Keeping your stop loss just below this candle itself, you could have easily entered. But this is based on candlestick psychology. You are entering positions. There is a very risk. It is very risky trade because you could have expected price rejecting from these levels and continue further towards the downside. Since the market broke this structure with fair value gaps, you can see fair value gaps over here. But this was very good entry, guys. You could have easily entered here, and you could have targeted all the way to this one. You can see this 1.68 level and the 100% move of this swing to this swing was about is almost near, and you could have targeted midway between these levels. You could have targeted the midway between this level. You can see clearly. You could have targeted the midway. And clearly the market here also broke this structure. You can see clearly the market here broke this structure as well. You can consider this to be a break of structure as well. And if you consider this swing momentum, and if you try to plot the fib levels here, the common point between this to the common point between this, you could have plotted the F50 levels over here. You can see clearly the market failed to close below these 250 levels and consolidating throughout this range, guys. Around 2 hour 33 minutes, guys, the market consolidated in a sideways manner. You can see there is no clear price action forming here. In case if you could have seen this kind of support here, you could have targeted this swing high, but again the market rejected and continued further selling towards the downside. I think with this momentum, guys, there wasn't a clear momentum towards the upside because there is no fair value gaps as soon as the market tried to break this structure. But in case if you consider this break of structure over here, guys, and if you could have considered the order block levels here, you could have easily seen once if the market touched this order block, you could have traded towards the upside. But in case if you might have your enter long position here, guys, because there is no short entry here, because here you can see the market clearly broke this structure. You can consider this to be a chalk formation. You can consider this to be a chalk formation here that you can see. Here also the market took support from 200 moving average, and here also you can see price rejecting from 200 moving average, clearly signifying some sort of bullishness. And you can see the market here consolidating this after breaking this high. This kind of consolidation is a very clear sign. You can see here the chalk formation over here. And here you can see some kind of consolidation here. What you can see is that you could have easily entered long position also here, keeping your stop loss just below that candle and targeting all the way towards the upside. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, we could have targeted the 1.600% move or the 1.68 level. You can see the price almost reached the 1.68 level, guys. When you see this kind of multiple rejection rates, you could have easily entered and tried your stop loss all the way. Or if after this kind of retracement, you could have tried your stop loss to this level. And again, the market retraced and tried to move higher. And you could have tried here. And once the market failed to break this high and broke this low, guys, here the market actually broke this low. You could have exited your long position. But here, though, there is no clear price action, guys. But definitely, you can see the market here after this kind of bullish momentum, after the break of structure, the market is trying to trade above the 450 levels over here, and price rejecting from 200 moving average, clearly signifying some sort of bullishness. And in case if you might have taken anywhere here a long trade, guys, you could have just hold it on and keeping your stop loss just below this candle also. But you can see clearly in at around 130 and all, you can see the market here clearly broke this high as well. You can see the market clearly broke this high. You can consider this to be a breakout structure, but it wasn't a very good impulsive momentum, guys. But you can see this kind of candle over here, this kind of bullish candles over here, and you can see rejection of price from these levels, clearly signifying some sort of bullishness over here. Once if this high has been broken and the price is consolidating above the 9 as well as the 21 moving average and the 200 moving average below, or in case, guys, if you could have used the anchor VWAP levels, this is the swing high. So if you try to plot the anchor VWAP levels here, and see in case if the market is trying to support there. You can see guys the anchor gap level which I have placed, the market is trying to take support here. Once if level is been broken and the market retraced here, rejection of price and a dodgy candle formation here, you could have just kept your stop loss below that anchor gap level and the dodgy candle over here, and you could have trial all the way towards the upside. So in case if you could have in trade that zone, you could have put this trade extension levels as the common point within this to the common point within this to the common point within this. You can see you could have traded all the way to 4.26 level. This is where you could have easily traded this. Or anywhere along this zone you could have exited. It's fine since our risk is very will be tremendous. And these are the three trade setups where you could have traded in Bank Nifty guys. There isn't much trade setups in Bank Nifty where you could have easily taken. So the first setup which I would like to explain to you further is that look at this line over here guys. This is the weekly pivot level. So let's like to mark it in blue guys. This is the weekly pivot level. So and this is the daily pivot level over here. So you can see the market broke this high and the market is rejecting price from this level over here, the day VWAP level. And you can see the market clearly broke this structure after rejection of price, and the market retraced to 50 levels and rallied all the way to 100% more as well as the 1.68. And here you can see the market showed some kind of bearish sentiment, broke this low with fair value gaps, but the market took support from this 200 moving average and rallied all the way towards the upside, clearly showing that there is some sort of demand. Again, the market retraced to 50 levels and reached all the way to 100% move. And after this 100% move, the market trade all the way towards this sideways. And if you try to plot the anchor gap level here, you can see the rejection of price from these levels over here. So you could have just entered here and you could have targeted all the way towards the upside. This is how you could have traded in Bank Nifty guys. So let's look into Nifty 50. As Nifty 50 expiry, let's see how you could have easily taken. In Nifty 50 also you can see clearly the market gap down. There was a very huge gap down guys, around 165 points, and whoever might have bought puts here might have doubled their profits and would have exited as soon as the market opened. Or in case if they might have holded on, you can see after this kind of momentum that premiums would have indicated. And there was this momentum doubled the premium guys. But you can see after the market gap down, a huge gap down, you could have expected the market to behave bearish only guys. Usually whenever the market clearly gap downs aggressively, you could have expected some kind of bearishness only. But what happened today is that since it was expiry day, you can always expect some kind of manipulation loss. In expiry days, usually there would be some sort of manipulation. And you can see price rejecting from daily gap level and broke this structure. You can see clearly the market broke this structure. This is the initial break of structure guys. First it broke the day's first candle's high, clearly signifying the market sentiment is bullish. Rejection of price from daily gap level, market broke the structure with fair value gaps or imbalance. And you can consider this to be an order block level. This is a clear 1 minute order block. And you could have easily taken long position once the market reached this level. And you can see the market here rejected price here it rejected price, here also it rejected price. So whenever the market retraced to these levels, you could have easily entered long position somewhere here, keeping your stop loss just below that candle itself. And in case if you try to plot the Fib extension levels guys, the low of this candle to the high of this candle to the low of this candle. So you could have trialed all the way to the 100% move here, or you could have trialed to the midway between 100% and the 1.68 level. You can see the midway between the 100% and the 1.68 level. This is the 0.5 level. Usually sometimes the market might face rejection from these levels guys. You can see here it was 100% more and the market retraced here. So if you consider this impulsive momentum towards the upside, so if you consider this swing over here, the low to high of this candle, you can see the market trying to take support from 50 levels over here. So after this also you could have entered long position. And if you try to plot the Fib extension levels, the common point between this to the common point between this to the common point between this, the market didn't reach the 100% level. But definitely you could have taken here long trade guys, but keeping your stop loss just below that candle itself. Or after kind of rejection of VWAP level, you could have tried your stop loss still there. You can see rejection of price, you could have entered here itself. And you could have traded this trade guys. And definitely as it was an expiry day, you could have expected some kind of manipulation. And you can see how the market here, you can't even trade guys, this is option sellers trade. What we could have expected to trade in this kind of region. Even neither option buyers, even the call option buyers or put option buyers will not have made any profit during this position trade. But you can see clearly the market Here, after this kind of bullish sentiment, the market clearly broke structure towards the downside here. You can consider this to be a clear break of structure. And if you consider this swing momentum, guys, so in case if you consider this low to high of this candle, you can see rejection of price from 0.223 level, or if you consider this momentum, guys, this is the 50 levels, and you can see price rejecting from fair value gaps over here, or anywhere along this zone where you can see there is a fair value gap here, guys. But definitely after this kind of rejection from this zone, guys, let's try to take this day VWAP level out. So it will be very easy. Here, this gray color is the weekly pivot level, guys. Weekly VWAP level, sorry. You can see rejection of price from higher levels, and you can consider this to be an order block level also. This is a 1 minute order block. They clearly market broke the structure, and market showed some kind of manipulation, fake breakout, and close away below that zone itself. But let's look into that later, guys. You could have easily entered your short position here and targeted hitting a stop loss just above that candle. And in case if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, we could have targeted the 100% move here. And market again took support from the day VWAP level. So short position here, guys, and short position here, and you could have targeted all the way towards the day VWAP level. You can see price taking support from day VWAP level. Again, the price took support from day VWAP level. And you can see after this, the market rallied all the way towards the upside. And clearly after this, you could have taken long position, and you could have traded this zone also. You can see this kind of channel pattern consolidation over here, clearly signifying some sort of bullishness. We could have expected the market to even break out, guys, but definitely the market rejected price and continued further selling towards the downside. I have taken a long position here, guys, during this zone, seeing this kind of support from this day VWAP level and seeing this aggressive buying. I expected the market might even continue, might reach all the way to this zone. And you can see how the market reached all the way to this zone itself. Right? And you can see price showed some kind of fake breakout and closed below that zone and continued further selling towards the downside. And if you can see how the market behaved was aggressive selling, again the market retraced towards the upside. If you consider this high, the common point between this could be slow over here. You can see the market, this is the 550 level, where the market was not able to cross this 250, and the weekly VWAP level, where the market also faced rejection from weekly VWAP level and continued further selling towards the downside. Either you could have bought a put position here, deep in the money put option. You could have traded this towards the downside, targeting this swing low. But there is no clear price action, guys, or after seeing this kind of aggressive buying after taking support. Whenever the price guys either taking support from the 200 moving average or the daily up level and shows some kind of huge bullish momentum, definitely you should take long position, keeping your stop loss just above that candle and targeting all the way to the nearest supply or demand level. I think this also it's better, guys, whether you could have traded it or not. Seeing this kind of rejection of price from daily up level clearly signifying some sort of bullishness. Again, you can see the price taking support from here, checking price over here. You could have even tagged this levels also. But as today is Nifty 50 and expiry, guys, you can expect some kind of manipulation only. You can see how the market tried to move and manipulated all bias, option bias. That's it, guys. That's it about my Nifty 10 analysis. I hope you're understanding what I'm saying. In case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family. And you can keep in touch with me in case if you want to keep in contact with me or if you want to ask me something. Instagram is the way to go. And you can definitely message me there, guys. And leave a comment below in case if you want to show any suggestions, tell any suggestions. I would be glad to read, guys. Thank you, guys.